right now, even gold's not big enough to really take on the mantle, nor is it fast enough. Bitcoin is tiny relative to the U.S. dollar system. But the thing is, as the dollar becomes more destabilized, those other things have an incentive to grow, right? So right now, as long as the dollar is reasonably stable, there's less incentive for all these global players to kind of jump into these other assets. But over time, as the US goes through its fiscal spiral, there's more and more obvious signs on the wall to get into these other assets. They become larger, they become more liquid, they become more widely held, and more technology builds on top of them. They get more and more ready. In the meantime, I mean, that's partially why at Ego Death Capital, we do venture for, building infrastructure and solutions on Bitcoin.
Lyn Alden begins by questioning the necessity of Bitcoin in the context of the broader financial ecosystem, especially considering the rise of stablecoins. Stablecoins, despite their centralized nature, offer a form of dollar exposure that can be crucial for users, particularly in the global south. While stablecoins have proven useful for providing stability in volatile markets, the discussion highlights the ongoing efforts to integrate stablecoins with Bitcoin, enhancing their utility while leveraging Bitcoin's decentralized foundation. One key point is that stablecoins, while currently operating independently, could benefit from the integration with Bitcoin's infrastructure. This would allow users to maintain dollar exposure while enjoying the security and immutability of Bitcoin's decentralized network. However, Alden suggests that stablecoins do not inherently need to be tied to Bitcoin, as their current use cases and technology stacks serve different purposes. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
One thing to kind of question is, do you need Bitcoin for something, right? So for example, because stablecoins themselves are inherently centralized, the rails that they run on, it's an open question of, how much decentralization do they need? There are various Bitcoin tools that are building to bring stablecoins back to Bitcoin in some way. So I think, especially for people operating wallets in the global south, having a Bitcoin and a dollar balance is really powerful. So I think basically dollar exposure can make those tools better, and they make it so that people actually use them. But I don't think stablecoins as a whole necessarily need to gravitate toward something like Bitcoin. That's almost like a separate tech stack that makes sense for their own purposes. When we go back to the other types of scaling solution, I think there's really two tech paths that we're seeing. One is the kind of what we've seen on Ethereum, which is you have like roll-ups and things like that. There's been a lot of interest in building that kind of thing on Bitcoin more recently. But the other tech path is interesting because it didn't really inherit it from other ecosystems. So the Lightning tech path, as well as one thing I've been really excited about in the last few years is Chalmy and eCash. So eCash was invented like 40 years ago, by kind of the grandfather of this whole digital money.
David Chum.
Yeah, this whole digital money movement. And the problem was, so it's a really good privacy and medium of exchange solution, but it was built on the dollar. So it was built on sand. And the really cool thing is that Bitcoin actually makes Chalmy and eCash better. It's kind of building that really cool technology on granite. And so in the past few years, there's these open source protocols that are kind of coming out to actually make that workable. And so I actually think that the combination of Bitcoin, Lightning, Chalmy, and eCash, plus these various, fraud proofs and rollups and things like that, there's actually a pretty big assortment of tech stack, some of which kind of was built on other ecosystems and is now kind of coming back to Bitcoin, some of which was kind of, grown up within the Bitcoin ecosystem. I think there's multiple paths forward there. And I think that things that make sense to be built on Bitcoin that actually inherit its decentralized, immutable aspects will be. And there are other things that don't really need that level of immutability, and they can run on whatever sort of ledger makes sense and is cheap and is allowed by governments to exist, because it's centralized down to the core anyway. So I think this is inherently a multi-decade process. network effects of this magnitude don't change quickly. It's not like, for example, something like cell phone, like smartphone adoption, that can happen in a decade or a decade and a half. Whereas something like switching the back end of the entire money system is something that's more of like a 40-year thing. Even the switch over from the UK pound to the US dollar, that really was a multi-decade process that kind of started around World War I. And it went all the way to the Suez Crisis, 4 decades later. And so I generally view it as along those lines. Basically, right now, and some of that feeds on itself, right? So right now, even gold's not big enough to really take on the mantle, nor is it fast enough. Bitcoin is tiny relative to the U.S. dollar system. But the thing is, as the dollar becomes more destabilized, those other things have an incentive to grow, right? So right now, as long as the dollar is reasonably stable, there's less incentive for all these global players to kind of jump into these other assets. But over time, as the US goes through its fiscal spiral, there's more and more obvious signs on the wall to get into these other assets. They become larger, they become more liquid, they become more widely held, and more technology builds on top of them. They get more and more ready. In the meantime, I mean, that's partially why at Ego Death Capital, we do venture for building infrastructure and solutions on Bitcoin. I mean, that's one of the things that we focus on because I think there's valuable work to be done there. But a lot of it is just a time component that we have a rising small incumbent with powerful network effects, but still small, versus this really huge incumbent wide network effect, gradually destabilizing thing. And I think, even years from now, there's going to be no death of the dollar. But I think what we're going to see is a dollar transition to more looking like an emerging market currency, which is that you have problems that no one seems to know how to put out the fires for, because as we've discussed in this interview, they're so structural, they're so just inbuilt, and nothing short of an overhaul would fix them.
Alden emphasizes the potential impact of Bitcoin and other digital assets in emerging markets, particularly in the global south. These regions often face economic instability and lack access to reliable financial systems, making them prime candidates for the adoption of decentralized financial tools. The combination of decentralized communication tools, privacy-focused financial solutions, and Bitcoin's inherent advantages could provide significant benefits to users in these regions. Alden suggests that while adoption may be slow, the foundational elements being built now will create a more inclusive financial system in the long run.
Bitcoin and stablecoins really have been the two big things. And then there's just various pieces that put them together. So, I mean, things like, people leveraging their Bitcoin with stablecoins or leveraging their other cryptos with stablecoins, or trading them in kind of pseudo decentralized places. That's been, fairly popular in other ecosystems. Digital collectibles, I think that still has some legs to it, even though it just, keeps getting washed out. The thing that interests me the most is actually the combination of Nostr and eCash. And it's super small. That whole ecosystem is super small right now. And I don't expect, Nostr to be super big in terms of social media anytime in, say, the next 3 years. But what's really powerful about that is the payment directory aspect, because that's an area where it's already made my wallets better, in the sense that if, let's say we share an Uber and you cover it, and I'm like, oh, how can I pay you back? You have to give me payment information to pay you. You have to give me a Bitcoin or Lightning address, or give me your fiat ways to pay you, and then I have to pay you, right? So it's a bilateral process to make a payment that the payee has to be involved in. Whereas Nostr, what it's building is like a payment directory, and it's kind of self-organizing. So if anyone's on Nostr and they have their their Lightning wallet hooked up, or their Chalman eCash or whatever, in my wallet I can just look them up and pay them. It's basically, it gives you a Venmo-like experience, but not just confined to the U.S. dollar system. It's international open source version, and so I actually think that has some legs to it, because it improves the UX of the medium of exchange of Bitcoin. And then when you add Chalman eCash, you fix 2 of the 3 problems of custody. So with custody, there's 3 main problems. One is lack of privacy. Number 2 is that your account can be targeted or blocked or taken or something. And then 3 is you worry about rug pull of the entire custodian. And Chalman eCash fixes the first 2, because you have privacy, and that privacy makes it so that your account can't be isolated. And so the main thing you have to worry about is the entire Chaumian eCash custodian being rugged. So you can pick ones you trust. You can diversify across multiple of them, and so I think that there's actually a lot of building blocks there for people, especially when you think outside the US. You think of the whole global South. You think of all these people in 160 different currencies. There actually really now are some pretty interesting building blocks for decentralized communication, private transmission of Bitcoin and holding of Bitcoin. And I actually think that's fairly powerful for the next few years, at least for those that need that stack. So I do think that the Trump pivot and the Vance pick, obviously that's a more Bitcoin and crypto friendly administration than we've generally seen historically, both in the Biden administration and the prior Trump administration. People I think rightly raise concerns like, okay, after the election, what are the actual positions going to be? To what extent are promises kept and things like that. So we'll see how that unfolds. I have fairly high confidence that there'll be a more friendly toward this industry than the current one, should they get in power. However, I have low confidence that they'd have any way of really getting their hands around this fiscal spiral. I think part of the reason the train doesn't stop is that it doesn't really matter who wins. There are other things that matter based on elections, but I think that the fiscal deficit is not really one of them. And so my fiscal spiral, nothing stops this train outlook is election independent. There are around the margins, it can be affected one way or another. So for example, there are certain tax cuts that are set to expire in the next administration. And you probably would have different outcomes based on who wins the election on whether or not those tax cuts are likely to be extended or made permanent or not. And there's other things that would change. So there are lots of individual things that can change one way or another. But I think the deficit's going to be an issue either way. I think the fiscal spiral is in place either way, and that's very hard to address per se.
Alden addresses the potential political and fiscal implications of the evolving financial landscape. She notes that while certain administrations might be more crypto-friendly, the broader fiscal challenges facing the U.S., such as the growing deficit and fiscal spiral, are unlikely to be resolved by changes in political leadership alone. This fiscal instability could, however, accelerate the adoption of alternative financial systems, including Bitcoin. Alden suggests that while the US dollar is unlikely to lose its dominance overnight, it may start to resemble the characteristics of an emerging market currency, particularly if current fiscal trends continue. This would open up more opportunities for Bitcoin and other digital assets to play a larger role in the global economy. Please like and subscribe my channel.